All right, gang, welcome back to Money in the Tank. As promised, we've got Jolie is back this week. So how you been, mate? What's going on?
G'day, guys. Thanks for coming back for our next episode. All going well, just end of financial year. So we get busy at the company. So, just getting everyone prepared and clients sorted out. So appreciate the breather, mate. And we had the power outage as well to top it off as a cherry on top just after lockdown. So
Bloody
crazy,
difficult
crazy
period.
times.
Oh, it was really difficult, man. It was wild. 6 days without power. I did not think it would be that long. I thought it'd be like one day, no worries. So, oh well, everyone got through. And there's still people in Alinda who are without power until mid-July, I think.
Yeah, it's nuts, dude. It's crazy, and you feel bad for people out there. And I think I haven't read something before about people looting, which is disappointing. It's sort of pretty low.
Oh, that sucks. What, like robbing houses while people are gone or something? Is that what you mean?
Yeah, generators and stuff. Yeah,
That's shit house.
Yeah, hopefully they get it sorted, mate. And it's nice to have some good news about being more and more out of lockdown, which is great. So hopefully everyone can keep getting their vaccines and keep us out of lockdown, and hopefully take the power out of the government's hands, lock it down. And if we're all herd immunity and vaccinated, then we're looking good and we can get back to normality.
As soon as they let me take the vaccine, I'm there, man. I'll take them all. I'll have them all. I don't care.
Yeah,
AstraZeneca, whatever.
The Pfizer, the combo cocktail, Moderna. Don't recommend that, guys. We're not medical professionals.
Yeah, no, this is all general in nature. But I know also, and last weekend there was probably no D's game, so I'm looking, and at least we got crowds back this week. So I don't know if I can get to the game because it's an away game this week, isn't it? Essendon versus Melbourne.
We're coming off a loss against the Pies, so that was even worse to have to bloody sit through that and then have the bye. And so, looking forward to the D's getting back out against the Bombers on Saturday. I think 25,000 capacity, so it might be hard pressed, but I think I'll watch that one from home, mate. I'll wait till the crowds open up a bit more to make it just easier to get tickets. I can't be bothered until things become a bit easier.
Nathan Buckley should have waited 1 week to hang up the boots because the Pies came to play for him. Anyway,
all good.
This week we're going to be talking about tax time tips, and I'm going to be very careful. It's educational in nature. It's general in nature. It's not financial advice. If you need any financial advice or taxation advice, you should go and seek it through professional.
A professional, licensed professional. Absolutely. General in nature as always. But before we get stuck into some of those end-of-year tax time reminders and tips and checklists to do, we'll go through a bit of a market update or a bit of a general what's the latest news in the finance world.
Yeah. So you want to kick us off, Jolly? What have you got?
Yeah, so there's been a few things that have come up of late. A lot about inflation, and that's sort of driving from the Fed, which is the American version of the RBA. So they're sort of talking about inflation and whether they're going to start easing the monetary supply a little bit, so backing off some of that money supply into the market, which has then caused the stock market to get a little bit rocky. And then Jerome Powell, who's the Fed chair, came out and said, no, I didn't mean it that way. So that sort of then turns the market back around again. So the market's been going pretty crazy. It's going to be gangbusters. And I think the inflation thing and I guess domestically in Australia as well, the thing that probably we're seeing happen, and I think they all also predicted would happen, is we've sort of got a bit of almost a bottleneck. So sort of the inflation's come off. Let's think of all these supply chains that have had to back off in COVID, or materials have been stopped along the way. And now they're coming back online again. So we've had this buildup of demand, which has then created this bottleneck of inflation for certain areas, which has then flowed on to the inflation in general and the cost of goods. So that's probably what we're seeing, and the concern is whether that's got more longevity to it, or whether it's more of a certain aberration that we're experiencing because of this 1 in a 100-year pandemic.
Yeah.
All that flows onto the market going a bit chaotic, and when we talk about CPI inflation, the building materials, for example, are really ramping up to build, and that is formed from a lot of demand and also a lot of government incentives being pumped into the market. So the cost of building supplies are highly demanded. The supply is lacking. So it's pure supply demand economics 101. So it's been a really interesting period from a financial perspective, but an economics perspective too. And that's sort of inflation.
You and I were talking about inflation a couple of episodes ago. Anecdotally, Cappy, who is a mate of ours, is a builder, was saying there's like 10-week waits for like the types of lumber that he needs. I know there's been some wild movement in the lumber prices in America. Interesting that you mentioned Jay Powell, my boy Jay Powell. He always comes and saves the day for the stock market when it looks like they're going to.
Jay Powell. Yeah. Rossi, who was our guest on as well, mentioned the same thing that Cappy did. So we've had that lumber supply. I think he said 20% from July 1 is the increasing cost. Concrete's similar. All these things that are integral to going into house builds are ramping up in terms of the cost of supplies. So that's one thing the government wants to try to, the RBA wants to keep a lid on. But I think the underlying inflation rate is still tracking okay. It's just certain areas that have really ramped up.
Well, in America, you were mentioning that they were talking about, is it permanent or is it is it permanent or is it transitory? And I know Jay Powell has said before that he thinks inflation is transitory, but then a lot of good, knowledgeable financial commentators have come out and said, well, in places like food, for example, in America, they've raised the wages, they've raised the price of the products you're buying from somewhere like a Chick-fil-A or whatever. That's not transitory. That's here to stay. It's very hard to wind back wage increases, very hard to wind back price increases and things like that. But when it does come to PPI stuff like concrete, producer price index, concrete, lumber, and then being bought by the consumers, I guess, I feel like it could be transitory because it's a direct input and a direct pass on, right? Like with concrete and lumber, if the price goes up, the people who are building have to pass on the cost. But if it comes back down, I mean, they could try and keep it there to keep their margins up, but that would require the whole industry to do it. Someone's going to come along, undercut them, and then they'll have to bring the prices back down. So it has to be a mix of the two, I think.
And it all depends on what your competition's doing and whether that will flow through to the food. I've got
a quick news item, but I wanted to add one thing to yours, Jolie. The inflation part of it, where Jay Powell was saying that with tapering, if they have to taper the purchases, they're going to give a lot of advance warning, a lot of advance notice about when they're going to do that. And that will have an effect on the market, but he said they're going to warn well in advance.
Absolutely. And, just a couple of other things. Your Chick-fil-A reference there, I read something this morning that chicken wings are up 99% because of a short supply. So chicken wings in America. So that's an interesting dynamic happening over there because they're obviously popular with their wings. So again, a supply chain thing, I believe. And then I listened to an interesting podcast the other day talking about the used car market over in America, which could probably be transferred here to Australia as well, and how they're missing an integral part. I think it's like a semiconductor or like a chip that goes in a lot of the electronic or the cars nowadays. That
it's a chip shortage.
They had supply issues in Japan, and they had some issues with weather over there and tsunamis, and factories closed down because of COVID. And they've got a lot of cars there that just need these chips, but they can't be rolled out yet. And that's then transferred onto the secondary car market, so the used car market. So these used cars that were selling, very, very cheap, and now held and increased in their value in times back a few years. One of the car dealership guys was saying on the podcast. So it's a really crazy time at the moment.
Oh yeah, that is wild, man. And so Ford, Tesla, GM, they're all having to sort of fight for supply of these chips. But it's not just that industry. There's a lot of industries that use those semiconductors. So Intel and Taiwan semiconductor manufacturer, I'm sure they're trying to pump them out as fast as they can. And AMD, who gets theirs done through Taiwan semiconductor manufacturer as well.
On to your next news item, Arnold.
My news item was the one I've done a couple of videos about interim, which was the PSTH transaction, and they've done an update, and I'm aiming to try and give you the tankers an investor update, because they had the investor day last night, Jolie. They had a presentation by UMG, which was fire, got me all pumped up because I'm a shareholder, just disclosing. And then they had a bit of a breakdown by PSTH and Bill Ackman. So I'll keep it real high level here because I'm going to go through it more in depth, but it's basically they've made a stock purchase with the initial SPAC, but they've got cash left over, so they're going to create another merger. So you're going to get two SPACs for the price of one. And then they've created this other thing, like a free gift for people who are loyal and hold through till completion. And it's called a SPARC, which is a special purpose acquisition rights company. So it's basically like a new form of SPAC where if you participate in this initial one, you're going to get these rights to participate in future ones. And the beauty of this is that there's no cost of capital up front. The right doesn't cost you anything, but you can sell the rights because they've got value if you want to. And then when the deal comes along, it's signed, definitive agreement, so you know what the business is. you have the right then, or however many rights you hold, to buy in for $20 a share. And at that point, the price could be $30, $40. So you get immediate upside. So it's a pretty interesting development in the SPAC space. And SPACs were hot last year. Then they took a tumble. Now everyone hates them. But this one, I think, is changing the game a little bit. So it hasn't been approved by the SEC yet, but they are filing it shortly to try the paperwork to try and get it through. And if it goes through, I think you're going to see a big pop in PSTH stock price because of it, because it's just an amazing deal for retail investors.
More to come, Arndog, and doing those offshoot videos, mate. You get two Arnies for the price of one in any week, given week. So
just like the SPAC. Oh, don't hold me to it. It's too much work to keep doing every week. But I'm interested in this one, and I thought I did commit to giving an update on the investor presentation, and it was way longer than I thought it would be. It was like 3 hours, so it's a lot of content to sift through to update. I'm trying to just pick out the really important parts for the tankers to update them on. But
good man, good
mate. Have you got Rivkin's rules handy? I don't want to forget it.
Oh no, absolutely, we can't forget that. So for anyone on the audio book, here's the cover of Rivkin in his what's it called, convertible
in the drop.
So let's have a bit of a peek through here. We're on page 115. I better mark it. So again, Renee on Life, which seems to be a favourite section of mine. We've got reading fiction is for fun. There is no financial benefit.
What if the fiction's about finance, Rivkin? Hey?
Well, hey? I don't know, mate. He's not here to ask, is he? So,
that's awesome. Oh,
yeah, Bella. There you go. I must admit, I tend to prefer reading non-fiction or audio books of non-fiction. And if I'm keen for a fiction, I'll generally put a movie on. But anyway, it's just me.
I go through spurts of consuming. Like sometimes I want to consume just content that will get me out of where I'm at. So I'll read fiction, but then sometimes I want to learn something, or I'll be consuming financial news. And I just go in sort of peaks and troughs, There
you go, up and down. Cool, man. So I guess the theme of this week, given that we've got the end of financial year fast approaching, is just some general in nature, always general in nature when we're talking about these things, was a bit of a checklist and things to be mindful of when coming around to tax time, as to things to have prepared and have ready to go for your accountant or tax professional, or if you're self-lodging. So some of the things in terms of income-wise, you've got to obviously note your income or your payee salary, any other taxable income or interest earned, dividends received, capital gains. So there's some examples of income that would potential rental income that would go on the income side of your tax return. And then in terms of expenses for this year, it's a bit of a different year because we've had a lot of work from home. So there's some interesting methods around work from home expenses, which I'll run through in just a moment. You've got motor vehicle expenses if it's work-related travel in a personal vehicle. So that can be kilometres travelled to and from, excludes travel to and from work, but anywhere in between. Other expenses, so taxis or Ubers, public transport, bridge tolls, purchase of uniforms. So that's always an important one. I believe that it needs to be badged, it needs to be branded for work. So compulsory uniforms or protective clothing, laundry costs for work-related purposes. Self-education. So if you've had some self-education during the year or expenses for improvement in relation to your field, including fees or books or stationery, travel parking, be mindful to make sure you have those handy. Any union fees or memberships to industry or professional organisations. Purchase of sun protection or hats, sunglasses, sunscreen if you need sun protection for your work. So me and you, Arnie, we're indoors, probably don't need as much sunscreen if you can tell from our lack of tan.
I'm a ginger though.
But a landscape gardener might need a little bit there. Purchase of tools or trade for work equipment, telephone accounts for work-related calls, attendance fees for travel or seminars, books, journals, subscriptions, library expenses, and home office setup. So depreciation on purchase of equipment. So depreciation is a bit different to instantaneous. So you've got computers and telephones, furniture, and then details for home office running expenses such as heating, cooling, lighting, and cleaning. And then you've got investment-related expenses, which are a bit different then again. So, investment-related calls or attendance fees for travel or investment seminars. There's specific things around that. So speak to your accountant in terms of the the days you're attending a seminar when you are traveling, because you can only do a portion. Interest paid. So if you've got an investment property or a margin loan, if you've got interest outgoing, you can claim the interest. And fees charged on borrowed money for property and shares, bank fees, so anything in relation to investment-related activities, and then property rental expenses. So, as we've spoken about in the podcast before, rental properties have so many different deductions that can be in there. So, be mindful to try to track everything. And I always suggest to clients, if you can create a spreadsheet during the year and just as you pay it, you mark it down, it just makes life a lot easier come tax time, because you've saved all the receipts into a folder or an email, and then you've tracked it in an Excel spreadsheet to be able to give to your accountant, and then they can just cross-reference things and make sure that it all adds up. Water rates, insurance, interest on loans, as we mentioned, management fees, repairs, maintenance, lease prep, depreciation, capital works such as building and structural. So there's heaps of different things. And then there's a little caveat here, is just note from July 2017, travel expenses relating to inspecting, maintaining or collecting rent for a resi property cannot be claimed as a deduction. So That's a different one. That's a different one again. General expenses, donations, so anything under $2, I don't think you can claim. $2 or more, you can claim for registered charities, and tax preparation fees, so including travel to your agent or the tax agent preparing your return. Mm-hmm. In terms of the work from home, I mentioned, Arnie, so deductions if your home is not your principal place of residence. So deductions that you may be able to claim if you do have a work area or if you don't have a work area, they're two different things. So if you do have a work area, the cost of using a room's utilities, such as gas, electricity, you can work-related, and you can also do it if you don't have a work area. Work-related phone calls, it's yes for both. Decline in value, such as depreciation, it's actually yes for both if you do have a work area or you don't. Decline in value, depreciation of curtains, carpets, and light fittings. If you have a work area, yes. If you don't have one, you can't claim that. And then occupancy expense, such as rent, mortgage, interest, and insurance, you can't claim for either. So there's a link there to the ATO portal if anyone needs any of that general working from home information.
I'll just jump in there. I'll jump in there, Jolly, because working from home, I think last year, just to assist taxpayers with COVID, there was like a coverall working from home where if you didn't want to do all the calculation, you could just claim like one flat rate. Makes it easy.
So there's a shortcut method. So if I've got a note here, and it's a great point, Arnie, if you're working from home, you can, there's able to claim a tax deduction. The expenses must be directly related. So the shortcut method, which is the deduction of 80 cents per hour worked from home due to COVID-19, is allowed if you incur additional deductible running expenses as a result from working from home. So just marking the days that you're working from home, and you can claim that shortcut method. And then the fixed cut method is a rate of 52 cents per hour for the cost of utilities, cleaning, depreciation, office furniture, and work-related stuff. So you can claim a fixed related cost if you have that one there, or you can claim an actual cost. So you can claim the actual work-related portion of all running expenses calculated on a reasonable basis. So there's information on the ATO website under employees working from home for that one there. Bunch of super stuff too. So there's heaps of superannuation contributions and limits and tax deductibility there, salary sacrifice and personal contributions and catch-up contributions. So seek advice from a professional or your accountant for all those areas, or financial advisor for the super stuff. But there's a bunch of different things in there as well. So it was more just a high-level overview for people to say, hey, come tax time, there's a lot of stuff to be mindful of, and it does help out throughout the year if you can try to record and track the things you're spending money on to make sure that it's there as a record and you've got it in a spreadsheet. So it just makes your life easier come July 1 when you're ready to start the new year up and you're booking in to see your accountant or whatnot, and you've got things organised.
Yeah, three that jump to mind off the top of my head, and you might notice, Tankers, that I'll let Jolie take the heavy lifting on that one, because as I work for the ATO, I just want to be very mindful to only provide educational content when it comes to tax. And Jolie's done a good job of outlining the broad areas that go into, like the tips where you need to start thinking about the income side and the deduction side. But three deductions that jump to mind, which I know are readily available on the internet, even on the ATO website, is deductible contributions to super, which Jolie just touched on, prepaying any expenses that are deductible. You could also think about that if you want to bring something forward. And when it comes to managing your investments and the deductions on that, you can think about where it may be beneficial for selling an investment, such as shares, if they're at a loss or at a gain, and you might have carry forward losses from prior years as well that you can utilize. So just something to be mindful of as well.
Yeah, great point. Yeah, you can carry your losses forward. So if you have a gain, they can offset and utilize that loss to offset the gain. And prepaying interest is another one, as you mentioned, prepaying expenses. So if you've got interest and let's say you've got a gain or you've got a higher marginal tax rate for whatever reason in the current financial year, you can actually choose to, and you think it's going to be lower next year, you can actually choose to bring that interest prepayment forward if cash flow permits, to be able to help reduce that taxable income down a bit for that financial year.
Like a readily available example would be something like mat leave, right? For the ladies, for the tankers.
Yeah. If you've got some mat leave or a higher bonus, or your income from work's just been higher, or you're self-employed and you've had a booming year. You might be in the construction industry and all the build costs are all ramping up. You could be in a highly demanded area. Anything like that, and you're able to reduce that marginal rate down, which will then in turn reduce tax payable.
You know how you mentioned the example about sunscreen and how you're allowed to claim it if you work outside? Yeah, there's an interesting case, like case law that went to court where I think it was a flight stewardess or a hostess took the ASIO to court and won, and so she was able to claim makeup, because makeup is seen as an essential part of that job. Like, you have to be presentable to a certain level. So now I think anyone who is an air hostess or stewardess or a host is able to claim those sort of vanity items to make yourself look more beautiful, which I just find very interesting.
What about for us on Zoom, mate?
Well,
if we need to get a bit of makeup and a bit of grooming, look presentable. Now we're doing visual and audio.
Again, being careful what I say, but the general rule of thumb, and it's the same thing as what you're talking about when you're talking about claiming anything that's to do with education. So if you're working in a space and you're doing some self-education or education that relates to that job, it's called a nexus. So if there's a sufficient nexus between the job and the education, you can claim it. It would be the same thing with beautification. So if you and I could create a sufficient nexus to the income, to the deduction, then we could claim haircuts, beard trims, makeup, whatever.
Why we need to be pretty. Yeah, and no makeup today, guys. By the way, we're just coming fresh off the street. We're these pretty faces are just pure natural. No, I could
use some. I cut myself shaving. I could use a bit of foundation down here.
Oh no, I've got a little bit of wax in there. That's about it.
Good one, man. That was a good rundown. Thanks, Jolie. Thanks.
No problems.
All right, so maybe we'll move on to Q&A before we get to 50-50. And I had a 50-50 prepared, but you said something earlier in the pod which has made me want to change it on the fly. So I've got one I've just thought of.
Maybe we get 2 for the price of 1, Underdog.
Oh, yeah, we could do 2 for the price of 1, yeah.
2 for the price of 1. Let's do that. Cool. So did you want to read out the Q&A, Arnie, and I can sort of have a crack at answering it it's from Stacey, and then you can have a bit of a dip as well.
Yeah, so Stacey was asking about education bonds and what the best way to set that up. It was 2 parts, right? So it was education bonds and what's the best way of setting up for future payments for education for your children, but also if you want to invest for your child before they're able to, what are some of the complexities around that and what's the best way to go about it? Was that the question?
Yeah. It was just investing for your child. And then, we spoke briefly about investments and she mentioned in their bonds. So the Barefoot Investor speaks about bonds. So, I'll take the bond part. And if you want to chat about the trust and shares, Arnie. So the investment bonds is a fairly common thing, or it's not super common, but it's quite utilised when it comes to people with potentially some excess cash flow and they want to help start preparing for future expenses for their child or just future life goals that they have for their child, whether it might be giving them a lump sum at their 21st birthday to help go towards the purchase of a property or some shares or a car or whatever it may be. So investment bonds are a vehicle that can be tax effectively invested. So they're sort of taxed internally in the bond and can be invested in any different area. So it's a bit like super when it comes to, you can invest in shares and property or listed property, international shares, cash fixed interest, infrastructure. All those things can be invested inside the bond, and the bond is the structure itself. And that's an investment bond. It's taxed at up to 30%, and it can be drawn down with tax. There's tax implications in certain drawdown phases. So speak to your advisor or accountant about that. But and then there's an offshoot as well, which a few companies are doing out there. Education bonds. So education bonds are just taking it to another level, and there's rulings around being able to use that bond, and it can be more tax effective when it's for educational purposes. So if you've got something in mind for your child that you want to start putting some money away and planning for their future, and you think it's going to be more for education related purposes, like for high school, because high school fees obviously can be upwards of 5 to 10 to 20, 30 grand a year sometimes. Having an education bond invested correctly can help go towards contributing for that child's future planned expenses with schooling. So that's an example there, Stace, of how bonds work and how investments work. And then, speak to any professional advisor or a licensed advisor or accountant, and they can help explain that in more detail as well, and how to tailor it for an individual's certain situations. So that's just a general overview on how bonds work.
Yeah, and the second part of the question, which was just if you want to invest for your children and what's an effective way to do that. So one option that springs to mind is setting up a trust. The benefit of doing so is that it can be held like in multiple names, and then when the child turns 18 is of age, or maybe it's even I think it's 18. You need to double check with your accountant. But then they can then transfer those assets to their name, and there'll be no CGT event there, as opposed to you holding them for them and transferring at that point in time. You would incur the cost of transferring. It would be a capital gains tax event, which you would be liable for. So, yeah, there's a bit of complexity there, and trusts are not the cheapest thing to set up or maintain. So you need to sort of have a think about how much it's going to cost and what it's worth to do so. But that's probably one option that you can think about if you want to invest for your kids.
Yeah, because if you're investing in minors' names, you've got minor tax brackets, which can be quite significant. So, speak to your advisor or accountant around that. But hopefully that provides a bit of a general overview there, Stace. Anything else you wanted to add to that one, Arnie?
Not to that one, mate. I'm pretty keen to get to the 50-50, what's your choice, either or.
Yeah, let's do it, man.
Gun to your head. So earlier on you said about the chicken wing inflation issue and how there's a shortage of chicken wings, right?
Yeah.
And I saw a story about this during the week, which was saying that there was a certain chain in America which is known for making wings. And because of this shortage, they've just swapped to chicken thighs. They just thought, bugger it, we're going to give chicken thighs instead. And I was thinking chicken thighs are way better than chicken wings. So here's your 2 for 1. If you had to choose chicken wings or chicken thighs, I want to know which one you want. And then the age-old question, chicken thighs or chicken breast?
All right. So chicken thighs, it's not actually with a bone, is it? The thigh is a separate bit, and they cut it off and they cut it down. Is that how it works? The thigh?
It has a bone in it, but when you buy them from the store, like if you or I go to the supermarket, you can get them bone in, or you can get them as cutlets, and they've taken the bone out.
Yeah, that's right. Yeah, because I'm thinking of my mate Dave. Shout out to Dave, avid listener of the podcast. Owns the Sporting Globe in Chirnside Park. So I was there a week or so ago, taking up a deal Dave had on offer, much to his dismay. He wanted me to pay full price, but I took the deal. And the deal was 6 free chicken wings, but they'd run out of chicken wings. And I don't know if it's to do with the shortage, but I got chicken bites instead, which I believe, Dave need to write in and correct me if I'm wrong, but they might come from a thigh fillet. And I actually prefer the chicken bites. So, Dave, you've done me a favour that night. I was really happy. I actually prefer the chicken bites, which I believe would be thighs, as opposed to the wings. Reasoning around that, I like the taste, and it's less issue when it comes to fingers and bones and all that stuff. So less to do, lazy.
What about chicken thigh versus chicken breast?
I don't mind chicken breast, Arnie. It's probably going to depend how it's served up to me.
All right, I'll accept that caveat because I'm the same as you. Like I hate chicken wings. I love chicken. I feel like chicken wings is like too much trouble to get the meat off the bone. Like just give me the thigh, which is this big beautiful, juicy, chunky bit of meat. A lot of people don't like the thigh because it's like the dark meat, but I find it's got the most flavor. And when you're having it as like if it's fried, it's just the best, I reckon, because it retains its moisture. And when you said that part about how the chicken breast is served, that's what I also think. So if I'm having fried chicken, I want the thigh. If I'm having something else like baked chicken or something else, I still like the chicken breast or a roast chook.
Yeah.
I prefer the chicken breast. So
I think if I go to Nando's, I go, if I'm getting a quarter chicken, I'll ask for a breast. So my answer must be breast, Arnie, when it comes to like Nando's as an example, because I tend to like it and you get more. I think you get more with it when it comes to the breast, especially from Nando's if you're doing a quarter.
So for you, breast is best. And for me, the thigh.
Yeah.
All right.
Thigh for me over the bites over the wings, I prefer. And I think there's a YouTube clip of someone that's an expert in how to do chicken wings. So for anyone that's interested in delving into a YouTube channel that explains about chicken wings and the best way to eat them, there's actually a specific way of breaking it and it slides off a bit easier. So maybe, Arnie, that could be one for you to check out too.
So maybe I've been doing it wrong this whole time and just maybe that's my problem.
You possibly have been, mate. You possibly have been. And we've got a second 50-50 as well. And please, guys, keep writing in your 50-50s. We love them. The more crazy, the better. And also your Q&As. So thanks again for Stace today. And please, send in the Q&As. We'll let you guys know where to send them into. And Arnie's got another 50-50 today also.
Oh, you've hit me with one off the top of your head. Sorry, I did have one. And I didn't prepare it. Hang on. Let me get one up quickly. No. Hang on a minute. I thought I gave you two because I gave you the chicken, the two different. Here it is.
You never give them to me prior to. We were always off the cuff with these ones.
Age-old cats or dogs?
Oh, that's too hard.
I'm an
animal lover. I like both.
I know you've got both at home as well. So
we're overloaded at the moment. We've got 2 cats and 2 dogs.
That's why
young cat and dog, young and old cat and dog. So
this is why Kate said it's gun to your head. You have to choose cats or dogs.
Oh, mate. It's hard to choose. Probably dogs got to do more with them. I take them out for walks and that. And, every night I take my dogs for a walk. Whereas the cats, they just, I love them, they're good fun, but they my one cat uses me during the winter for warmth, and I know she uses me, but, that's the only time I'll see her from sort of, May through to November, and then it starts to get warm again and I won't see her for 6 months.
That's awesome. I'm going dogs too, and I love both. I've had both as a kid growing up. I haven't had a cat for many, many years now since I've been with my wife because she's really allergic to them. So we've only got dogs at home. So I'm choosing dogs for that reason. But I've always been a cat lover.
You used to have the big orange cat, I remember, at your house.
Yeah, Benji. I used to call him Little Lion because he looked a bit like a lion.
Cool. So cool, that cat.
Thanks, man.
So, we're animal lovers here at Money in the Tank. So hard to choose, but gun to your head. And where can people send in these questions, Arnie, for us?
Yeah, so get us at Money in the Tank on Facebook, Instagram, Twitter, and YouTube. And if you leave a like, comment, or subscription, that helps us grow the channel. I think next week we're going to be... What are we doing next week, Jolie? There's another interview that we want to try and get on. We've been saying for weeks we want to try and get a crypto interview going. But if not, we could do a bit of what to do, like where to invest your first $1,000 or something like that. Could be a good content.
Yeah, we'll have a think about it and we'll make sure it's fun. I've got an accountant we could bring on to maybe talk some accounting stuff. We could even chat it to Dave. I haven't even asked him yet. We might be able to get Dave on, talk about Sporting Globe and how it works in a franchise setting and how that might be an interesting one. And his older brother, James, who runs the Sporting Globe. So we could have a chat about franchising and how to run a day-to-day restaurant and the ins and outs and the ongoings and the cost breakup. So that might be a good one. I might hit up Dave as well. So, Dave, if you're listening, I might have already spoken to you by the time you check this out.
And also, just putting out the call, we got a lot of good positive feedback when we had Gabby on, entrepreneur, and she offered to do another pod with us about industry-specific questions around the marketing or digital marketing, social media marketing. So if you're in a specific industry and you want to ask Gabby some questions, please send them through to @Money in the Tank, Facebook, Twitter, Instagram, or YouTube.
Absolutely. And we hope you guys are enjoying the video content and seeing our pretty faces, our smiling faces. And we'll try to continue to do the video content and audio so people can have your selection. It's pick your choice or 50-50. Do you prefer your audio or your video? So you've got the choice of both.
Hey, by the way, I've got a dog here. Oops.
Oh, there's the schnauzer.
All right. That's it for the week. Thanks very much, gang. That's Money in the Tank.
Thanks, guys.